Hello, Namaskara. Welcome to my YouTube channel. This is TraderAgasthya. I hope that everybody doing well. And this video is to inform you that what is our rules to execute our strategy and in the market, and we will be simplifying the words which we are regularly using in our daily market analysis, and and we will going to simplify those words and into the simple words in this video. We cannot explain those words in every day, so I took a step further and making a separate video on it and giving the link in the every description of my video on the daily market analysis videos, and which I hope that it will be useful for everybody, especially newcomers whoever come to my YouTube channel. So without any delay, let's get into the market. First, I will be explaining the commonly using words in a market. So I hope that it will be useful, and if you are new to my channel, make sure that you have been subscribed to my channel and press the bell icon. If you like the content, don't forget to share with your friends. So let's directly get into getting here. We'll be commonly using a market jargons. The market jargons, the first we'll be using, that is an breakout. What is breakout? Breakout, which means price is breaking or rising above the resistance level on the upside, which means before breaking the price level is higher than the current trading level. So let's imagine that this is the current trading level, which is trading at 27 rupees. The market is now, this is for just for an example, I am telling that market is trading at 27 rupees. Now I am telling, when I am talking about breakout, though this is the trading level, that is the market is trading currently at 27 level. Now it is trading at, and I given the resistance level, that is 30 rupees. This is the resistance level I given for in tomorrow's trading session. I has a resistance. I told that there will be a breakout will going to be happen in tomorrow's trading session, which means breakout, which means the price is breaking upside above this 30 level. The price is now trading at 27 and breaking upside above 30 is, it will be called it as a breakout. The price is now breaking upside above 30, will going to take it as a breakout. I hope that it is clear. The market now currently it is trading at 27, and I given the resistance level, that is 30, which means when we are talking about breakout or resistance, that is especially it will be upside above what is the current trading level. This is 27 is the current trading level, and the resistance and the breakout will going to happen only upside above this 27 level, that is 30. Now I given the 30, which means it is upside above 27. Now I told that this 30 will going to be acting as the resistance, and any breakout upside above this resistance will call it as a breakout. The price is breaking or rising above 30 or in resistance level 30 on the upside, before breaking. In another words, before breakout happens, the price level is higher than the current trading level. This price level 30 is higher than the current trading level, that is 27. This is what breakout means. And what is breakdown? The breakdown is nothing but it is in the opposite direction, that is the price is breaking or falling below the support level or on a downside, which means the current trading level is 27. The market is currently trading at 27, and I given the support level, that is 24. Let's take 24. I given the support level. This is what the support level. This is the resistance. Let me highlight it with R, and this is the support level which I given or as a support level for in tomorrow's trading session. And the price is now trading at 27 and breaking down below 24. That is our support level which we have been given. That will be take it as a breakdown. The current trading level, that is 27, is market is trading at 27 and breaking below 24, which means the price is falling down below this level, 24 level. That is the level will be take it, or that what is action is happening at this level. No, at 24 level the price is breaking below 24 level. This action will be take it as, call it as a breakdown. That is what the words we'll going to use in our daily market analysis. The price is breaking or falling below support level. The price is falling below this 24 support level. will be called it as a breakdown, or in other words, before breaking, price level is lower than the current trading level. The current trading level is in 27, and the price what we have been given for in tomorrow's trading session as a breakdown region or as a support level, that is in 24. You can see that 27 is on current trading level, and we given that the lower level, that is in 24. The support level will always be lower than the current trading level, that is in 27, and the resistance level will be higher than the current trading level. The resistance will always, or breakout or resistance will always happens only upside above current trading level, that is 27, and the breakdown or the support level will be always there below this current trading level. I hope that breakout and breakdown is being clear to you. And coming to the bounce back and the pullback, what is first will be coming to the bounce back. What is bounce back here? The bounce back is nothing but, which means price is gap down and retesting the resistance, or the price given breakdown below support level and retesting the resistance level. Let me highlight first explain this, which means first I will be explaining gap down and retesting the resistance level, which means as we given in the previous, the 27 is the resistance level. Let me highlight this. 27 is the current trading level, and we given that 30 as our resistance level for in tomorrow's trading session. Let me highlight 30 is our resistance level for in tomorrow's trading session. Let me call it as R here, resistance R. We given that resistance R, and now the 27 is being given as an support. This 27 is an level which we call it as a current trading level. Now let me highlight that this 30 is a resistance level, and downside again we will be take it as a 24 as a support level. 24 is a support level in the market. For in tomorrow's trading session, 24 is a support. The 27 is a current trading level. Let me highlight with this. See, now the market is gap down. First will be highlighting market is gap down below 24 level. Let's say market is opened here in N24 and retesting this resistance. Now whenever the market is fell down below that level, now again when fell down below 24 level, that level will going to be acting as a resistance. Whenever the market is break down below this level or gap down below that support level immediately will going to be acting as the resistance. So simply you can imagine, or simply you can think about that. Whenever the price is fell down below support level, it will going to be acting as the resistance, and whenever the resistance is breakout, then the resistance level will immediately turn out as the support level, which means whenever support when the price is fell down, that upside all the regions whichever there will going to be acting as the resistance. So here the 27 is the current trading level and gap down below 24 level, that is gap down below 24, and now price is retesting this 24, retesting which means our bounce back will be called it as, and retesting which means bounce back towards this region 24 region will be called it as an bounce back. Gap down below support level or gap down below this support level, and that immediately will be turned it as a resistance. When before it was a support level, then before gap down or before breakdown it was a support level. You can see that breakdown below support level. Before gap down or gap down or before breakdown below support level, it was an support level. Before that, before happening gap down or before breaking down, it was acting as a support level. When immediately if the gap down, the price is gap down for tomorrow's trading session below 27, and now it will be immediately turn out to be acting as a resistance. And if the price is retesting upside towards this 24 region, price is retesting towards in 24, that will be called it as a bounce back. The breakdown level is now acting as the resistance. That's what I am telling, that when the breakdown happens below support level, that immediately turn out to be as the resistance. And if there any price is retesting, if the price is going towards an resistance area towards in 24, now that will be called as an in between that this action is there now, or towards when the price is going towards in 24 level, that gap down below 21 and the price is going 21 to 24, that action will be take it as an bounce back. So let's come to the pullback. Now let's come to the pullback. Pullback means, let me highlight that this is the current trading level, that is what we have been taking previously, and 27, and this is the resistance, that is on 30. Price is gap up upside above, which means the price is gap up and retesting the support, or the price given breakout upside above resistance and retesting the support. What we have been previously explained, that if the price is fell down below support level, that will be immediately acting as the resistance. Here what will happen, price is gap up upside above 30, this is the resistance, will be acting as the support level. When the price is gap up or giving the breakout upside above 30, which will going to be acting as an immediately, that will going to be acting as the resistance. Now the price is trading at 32 level, price is gap up upside above 32, and now when it is retesting, which means coming towards 30 level, this action is there now, 32 to 30 level, this action will be call it as an pullback, which means it always be in the negative. Action will always going to be acting in the will be happens in the negative, which means it is normally, it is good, pullback is normally good, and some of the traders is there who will going to take the pullbacks as well. So I am telling that whenever there is a bounce back and the pullback, we can immediately imagine that whenever I am telling that pullback, which means price is gap up or there is a breakout upside above this resistance is been happened, and a pullback, which means the level when the price is gap up, the resistance level which I am giving, that now acting as a support, and the price is retesting that level. However, in the most of the scenarios, that will be very good action in the market, and if it happens with the lower volume. And what is bounce back, which means price is gap down below support level, price is gap down below this 24 support level, or the given the breakdown below 24 level and retesting this 24 level, this action in between that gap down to this 24 level, it will normally acting in the green candles will going to be forming in between this 21, let's say price is gap down at 21 and retesting going towards 24, in between this 21 to 24 action will be taken in the green candles, and that will be called as a bounce back. And if it happens in that green, in the lower green value, that is confirming that some shorter term traders is taking their profits and exiting from their totally the weekends is booking their profits. So strong gains when it is retesting towards these levels, and strong gains coming in, and again they will go into short. This is what bounce back means in the market. Whereas coming to the options buyers, I hope that it being clear, the breakout and the breakdown and the bounce back and the pullback is being clear to you. If you if you not get this points, let me know in the comment section. I will be try to simplify it for you guys. Whereas coming to the options buyers, the breakout, which means as we told that, again I am telling that breakout, which means the current trading level is in 27, and I given the resistance level, that is in 34 in tomorrow's trading session, and price is giving the going upside above this 30 region, will be call it as an breakout. So at this point, whenever I am telling that breakout is been happening, then you can imagine that we have to buy the calls, or you can go longer by the futures. As an option buyer, when there is a breakout is been happening, when I am telling there is a breakout is happening at this level, you always have to think that we have to go and buy only calls, or we have to going long on the futures, which means buying the futures either in the Nifty or the Bank Nifty. And the breakdown, which means buying the puts or going short or the sell the futures. When there is giving the break, this is the current trading level 27, and giving the breakdown below this 24 level is an support level for tomorrow's trading session. I told that there will going to be breakdown below this level. Then you can think that we have to take the bearish position, that is the buying the puts or going short, which means you can short the futures or you can buy the puts at this point in the as an option buyer. As an option buyer, will always so as an option buyer we will always as an option buyer, we will always looking at the momentum opportunity opportunity to gain quickly, and we will avoid those trades which makes us to lock in the position for the longer time. Through that we will going to lose the money through the theta decay. This theta decay is a very important term. This term will going to be analyzed and will going to be in detail, will going to explain in the coming videos. I hope that if you find that it is difficult at this point, and then definitely you can ask me in the comment section. We'll be trying to solve it, that query as well. So I am clearing that as an option buyer, I am looking to gain quickly in the market. So I don't want to get lucky in the position where that there isn't theta decay. The theta decay, which means option premium will going to be fell down as long as the position, or as long as the market stays in between in the range, we will going to lose the movement, we will going to lose the money in the market. Let's say when the market is given the breakout upside, when there is a market is given the breakout upside about 24, and it not able to move in that direction, then even though it is upside above our breakout region, we will still be losing with the money. That is because of theta decay, because of this time value. The time is very crucial as an option buyer. So if you have to always looking at there is a momentum opportunity. You have to quickly gain in the market, and you have to get away from the market as soon as possible as an option buyer. In my daily market analysis, I will be giving levels for an option buyers where momentum will going to kick in and give the quick and fast profits. If you are in watching my daily market analysis, at that point in my daily market analysis for an option buyers, I will be giving the trading levels that is especially will going to give the money in the very faster. You can make the money in the very faster way, and those levels which I am giving is actually the levels which I am buying for in tomorrow's trading session as well. So as an option buyer, I am looking that my mind and my I will be always, my eyes will go into the levels where the momentum will going to be coming, and where I am going to make the faster and quicker profits, where I will not going to lock in the position. As an option buyer, I will be trading only breakout up, breakdown, momentum approach. So it is important to know these jargons to get the things and to understand trading levels in my YouTube daily market analysis videos. If there are any doubts until this, make sure that you feel too free to ask me in the comment section. I will be try to solve it. Whereas coming to the now option sellers, so bullish positions. As an option seller, I am taking that bullish positions here. What is bullish position? As an option buyer, as an option seller, that what is still now what I am talking that as an option buyer. Now coming to the option seller, whenever I am telling that bullish positions, which means you can short the puts. Shorting the puts is an bullish, opening the bullish positions, or going long on the futures. We are going the long on the futures, which means there is an, even though the market is been in the range and upside above your breakout region, then still be you will be with the profits. Where if you are an option buyer and buy the calls, then you will be, if there is a market is in the range, you will be losing the money in that region. So going long on the futures, or you can short the puts. You shorting the puts at also that region when there is a market is in the range, and if you are in shorted the puts, then you will going to gain through the theta decay in this position. So bullish positions, which means whenever I am telling that bullish positions, you will be shorting the puts or going long on the future. So it is important to remember that we are not buying the calls at this point. Whenever I am giving the bullish positions, at that point I am telling that there will be a range bound bullishness. So that level will not be the buying level, option buying level, that will be the option selling level. Whenever I am telling that there is a range bound action will be there in this direction, bullish or bearish direction, then it is, you have to think that it is not the option buying level. We can only shorting in the options. Where I am coming to the bearish positions. What is bearish positions means? Which means shorting the calls or short selling the futures. Important to remember that we are not buying the puts at this point. Whenever I am telling that bearish positions, which means in the downside there will be a breakdown will going to be happen, and in that direction there will be a range bound bearishness can be expected. So which means When there is a range bound action, which means we can gain through the theta decay in the market. That is especially through the calls. When we are shorted the calls, there will be premium will going to be filled down. Then as an option seller, as an options call seller, we will going to make the money in those positions. So this is what means whenever I'm telling that bearish positions, which means shorting the calls, we're going to gain through the theta decay, or we can short selling the futures as well. So why I am telling these words is because as an option seller, we are looking to gain through the theta decay, where there is no momentum in the market and price is in the range or the range bound action in the direction of the price break, either upwards or the downwards. In either the direction the price is breakdown, we will going to gain through the theta decay. Important to remember that we will going to gain through the theta decay. That's why I am telling that for an option sellers, you can sell only the options at those positions at those time. At that time, it is safe to conclude that whenever I am taking building either bullish positions or the bearish positions, you can assume that in that direction there is a range bound price action. I hope that it is clear. As an option seller, I will be interested in selling the options, that is the calls and the puts, at the bounce back and at the pullback. As an option seller, I will be looking at calls and the puts. We will going to short the selling the options, that is this calls and the puts at the bounce back and the pullback. If there is a bounce back, that's what is bounce back, which means bounce back, which means price is gap down below 27 region. Let's say price is gap down, the previously price is now gap down below this 27 and now going towards 27. This action is there now. This action, this is what we call bounce back, which means this is temporary move in the market, and the sellers will coming at this 27 level, or 27 level will be the shorters will be coming into the market, short sellers will coming into the market, and overhead supply will coming into the market at 27 region. So we will going to short these positions. We can short the futures, or we can short the calls, which means shorting calls, which means we'll be building the bearish positions in the market. This is what we're going to do. At the bounce back, we're going to short the calls, or we're going to short the futures as well. So what if the market is given the breakout upside above 27 region and pulling back towards 27, given the breakout upside above 27 and there is a pullback towards 27, which means this is a shorter this is a temporary move in the downside. This is 27 region. Now we're going to be acting as a support level. This is where the most of the call buyers, buyers will coming in the market and push the market to in the upside direction. So I am always looking at every opportunity as a buying opportunity. If there is a market is in the bullish direction, and every dip is a buying opportunity for in the market. So I will going to buy the calls, or buying the calls, not going to buy the calls, we're going to buy the futures, and as well as we're going to short the we're going to short the puts at this point. When there is a pullback is happening towards 27, we're going to buy the futures and we're going to short the puts. This is what means. And respectively, and that we're going to call some puts will going to be shorted, or then bounce back and pullback respectively. And as well as there is an opportunity to take the breakout and breakdown. Then when there is a breakout or breakdown is happening, this is what the trading levels for an especially for an option. By a breakout will be the buying the calls, and the breakdown will be the buying the puts. This is levels which we have been given for the option buyers. But as an option seller, this is where you can make the most of the money in the market. This is where momentum will also going to be kicking, and you will also going to make the faster profits in the market. And that direction there will be sudden, if there is a breakout happens on that direction in the upside, there will be sudden rise in the price, and if there is a breakdown happens in the market, and there will be a sudden fall in the price, that will going to make you will going to give you the faster profits in the market. If there is a breakout or breakdown, then we will not going to miss it, and this is where the most of the money can be made in the market through the momentum approach. Concluding that as an option seller, I will going to trade in the 4 ways. So you can look at what are the 4 ways. Pullback from the support. This is the support level. Let's say 27 is the support level. and the price is gap up upside about 20, and now the price is gap up at 28 region, and now pulling back towards this 27. Then we're going to build the bullish positions, which means shorting the puts, and breakout upside above resistance. When there is a breakout happening at 27, then again we'll go into again we will go into build the bullish position, that is the shorting the puts of this 27. Now again the third way of trading is the bounce back from the resistance. Now let's say that 30 is the resistance level in the market, and the price is fell down, the bounce back from the resistance, and let's say the 30 is the support level, and given the breakdown below the 30 region, now the 30 is now acting as a resistance level. The previously which been acted as a support before giving the breakdown or gap down, it is acting as 30 is acting as a support level. When there is a gap down and the price is breakdown below 30 that level, now it is acting as the resistance and giving the pull giving the bounce back towards 30. This action from the, let's say this is an 28, from this 28 to 30 level, the price is going upside. This is what we call as bounce back. At this level we are going to build the bearish positions. Building the bearish positions, which means shorting the calls, or if there is a breakdown below support level, if there is a breakdown below support, this is the 30 is the support level and price is giving the breakdown below this level, that will going to build the bearish positions, that is the shorting the calls. And there is a gap down is happen and there is a bounce back also towards the 30 level, again we'll going to short the calls. This is when there is a bounce back is happening with the lower volume, again we'll going to short the calls at this point, that is the building the bearish positions. So this is for us perhaps the very crucial crucial part to understand that in our market analysis, and what are all the rules to execute our strategy. The market must and should have to open in between our levels. Market has to open in between our levels, and then we will wait for 10 to 15 minutes and a pre-market settle down. Here we are avoiding the chances of fake breakouts or breakdowns. When there is a 9:15 to 9:25 level, at this 10 to 15 minutes, there will be a lot of volatility will be there in the market, and if you are taking the positions at that point, then usually we're going to get away from the market. There will be a lot of false breakouts and breakdowns will be happening at that point. We will get into the market only usually after 9:25 to 9:30 a.m. and if breakout or breakdown happens above or below our price level, then 3 or 5 minutes candle should close visibly above or below the price level. Then we will take the respective positions. The visibly candle needs to close, which means, let's say this is the price level which I am given that as in resistance level. This is the 30 as in resistance level I given. Resistance level means the trading level is actually higher than the current trading level. Current trading level is on 27, and given the breakout upside above 30 will be taken. This is an resistance level. So visibly closing means the candle should have to close like this. This is the candle like this, it should close. Means there should be an visibly the candle, now it is opened at this level and closing visibly upside above 30. Let's say this is the 30, which means 30.1 to 30.5. Let's say 30 point candle is closed at 30.5. Then we are going to take the positions. So if the breakout upside above 30, then the candle should visibly close. Or if there is a breakdown is happening, the candle again should visibly close. This, let's say open, and this, let's say close. The candle needs to be visibly closed, and the volume also should be higher than the previous candle volume. Last, we will avoid last 30 to 40 minutes of the trading session, and if and only if there is a price breakout or breakdown happens, we will going to avoid the last 30 to 40 minutes of trading session. If there is a fresh breakout or breakdown is happening at that point, whole day there is no breakout or breakdown is happened. This is especially for an option buyers. Whole day there is no breakout or breakdown happened, there is a market stays in between in the range for the whole day, then we will and then the market is giving the breakout upside breakout or breakdown, let's say at 3 o'clock, then we will avoid this, and trade because only there is 30 minutes to achieve our target. So we will going to avoid those trades. Let's say for example, whole day I didn't get any chance to enter into the market. There is no breakout or breakdown happened. Then at in 2:45 I will going to close my laptops and the computer screens will going to be closed, because if there is a breakout is still happened, then there is no time to trigger our one. There is no time to achieve our target at that point. And many brokers there will be a time limit that from in 9 so from in 3:15 to 3:25, at that point every positions will going to be closed. So if there is a breakout happening at 3 o'clock, let's say at 3 o'clock, then we will be having only 15 minutes of time to achieve our target. So generally we will going to avoid the post market trading as well. If already are the positions, this is for a fresh breakout or breakdown. There is no whole day we seated in the sidelines in the market and breakout happened at 3 o'clock. That will be avoided. And we already have the positions and we not yet achieved our target, then we will wait until market closes. There is a 30 minutes still there to achieve our target in those positions. If we have already at the positions, then only we will going to hold those positions. I hope that these rules is also is being understood. If you didn't get any words, and I hope that these words were clear to you, and if you are not yet, then let me know in the comment section. We'll try to simplify it, and feel free to ask. Please let me know in the comment section. Thank you for watching, and we'll be come up with 10 daily market analysis videos. I hope that you have been subscribed to my channel and pressed the bell icon. If you like the content, make sure to share with your friends. Thank you for watching. We'll come up with more content. Please subscribe and press the bell icon. This will be the motivating for me to make the new content and good content for you guys. Thank you.